Cyberlex, ticker symbol CYBL, has exciting news and great potential for a nice spike in the share price this year. CYBL raised revenue guidance, released impressive updated financials, and provided insight into 3 new acquisitions they will be completing before the end of the year. In this video, Mark Schmidt, CYBL CEO, will also be sharing his vision of what's to come for Cyberlex. So, if you're wondering if CYBL is on track to meet your investment goals, stay tuned. But remember, this is not financial advice, but for entertainment only. This is Lynn, and welcome back. So let's go and review CYBL. But first, if you could give this video a thumbs up in return for all my work, I'd appreciate it. As a reminder, we are expecting news that could give a good bump to the Cyberlex stock. 2 acquisitions planned for Q4 are solar and second in the unmanned aerial vehicle space, or UAV. CYBL has been reviewing 2 potential target companies in each vertical industry. On November 21st, Cyberlux CEO had this to say about their fantastic financial results for Q3 and their plan to raise guidance.
I do also want to talk about the recap of our third quarter. We had a really stellar performance in third quarter, as I think probably everyone recognized from the announcement. Being able to see the revenue go skywards like it did from 2Q to 3Q was very exciting. You know, it's nice to see a strategy actually produce results. It's easy to put on paper, so a lot harder to actually get done. So we were pleased to see that moving in the right direction. Obviously, October, we've already disclosed the beat we had there. So the full year is looking pretty exciting. You know, you look at the Q3 results from a net income standpoint, and it was better than we expected as well. And on the annual basis, you know, we already have over $500K in positive net income. Some of that had to do with some of the write-offs we did earlier in the year. So I really measured the third quarter, but it was, again, we're in a much stronger position than we've ever been from my experience in the company. I also will say that, you know, as we're looking at the rest of the year, as I had the team put out yesterday, I got a chance to look at where we are in November. I'm certain we're going to beat the outlook of 5 million that we've put in the IR deck and have been talking about. Question is how much, and the team is working on that. We'll have some more to say, hopefully before Thanksgiving. That's the goal. But you can expect that we will have some upward guidance from here. And next year, based on this week and based on the infrastructure bill work we're doing, we are very, very excited about the prospects for giving some upward guidance on that as well. That'll be a little later, probably after year end, once we see some of the new contracting start to populate. But very good effort so far. Really appreciate all of our team doing what they've been doing to get us launched the way we have since you know, we've been really pushing the business in the new strategic direction. You know, as a advanced technology platform company, we're starting to see all 4 of our areas of focus produce, and that's very, very exciting. Next year is going to be a fun year.
This leads us right into the article here showing that Cyberlex is raising revenue guidance by 27% for the year 2021. This is huge news and shows how quickly their new plans to grab market share are working. Cyberlex Corporation raises its revenue guidance by 27% for the full year 2021, from 5.2 million to 6.6 million, an increase of 26.9% from the company's prior guidance. In addition, Cyberlex is expecting to post positive net income from operations for the full year 2021. CEO Mark Schmidt said that this is a revenue increase of 1.4 million, up 27% from the prior estimate. Cyberlex is undergoing undergoing a transformation into an advanced technology platform company with 4 business units: Flight Ion Manned Aircraft Systems, Advanced Lighting Systems, Infrastructure Technology Solutions, and Infrastructure Software Solutions. We are seeing growth from all the business units, and we are very well positioned for 2022 to be the transformative year we all expect. Cyberlex Operation Alpha growth plan has 3 top priorities: drive growth through aggressive business development, acquisitions, and joint ventures. Number 2, to address core target markets with DoD products, new specialty UAS technology capabilities, solar and renewables, and with emerging infrastructure projects. And number 3, gain immediate business velocity by focusing on the new business and the new product pipeline, accelerating the South American projects, continuing to build out the company's organization, and driving the company's strategic IP development. In keeping with CYBL's Operation Alpha growth plan, let's hear from Cyberlex CEO on their acquisitions still planned for this year.
Roadmap and outlook. So we have at least 3 acquisitions that we will finish off before the end of the year. I've been working on one today, and very excited about that. In this acquisition flow, we're going to have one that's a solar acquisition, and then we'll have 2 others, one at least that's software. There's a possibility we have a third that will sneak in towards the end of the year. We'll see. We've got some global activity going on this coming week that will be pretty exciting to see what happens, and that could offer some opportunity towards the end of the year. So you can count on a solar acquisition for sure. Hopefully that'll be done in November. More on that this coming week, and then as we go forward from there, we see at least 2 more in pipeline. One I've already disclosed is a software SaaS acquisition, so software as a service acquisition.
Now let's look at Cyberlux impressive recent quarter's financial, the quarter ending September 30th, 2021. Per this news release, CYBL delivered a 613% revenue increase quarter over quarter. Cyberlux financial highlights included revenues from operations for the 3 months of $2.251 million, which were up 613% from the $0.367 million in revenue for the previous quarter. Cyberlux realized revenues from operations for the 9 months of $2.62 million, an increase of $2.62 million on a year-over-year basis. Net income for the 3 months of $155,299 grew 252% on a year-over-year basis. CYBL's total assets increased 1,169% year-to-date to $921,792 from $78,838. Total liabilities were reduced by $590,289, a 12.5% decrease versus year-end December 31, 2020. Cyberlex CEO Mark Schmidt commented on the results. We launched Operation Alpha, announced our first acquisition, added key personnel, launched our UAS business unit, and had great revenue, net income, and balance sheet results for the quarter. We're just getting started. We expect Q4 and beyond to be an exciting period of continuous growth for Cyberlex. The quarter ending September 30th exceeded CYBL's expectations for revenue growth, net income from operations, and liability reduction. Cyberlex also implemented the new $8.75 billion authorized share level with the Nevada Secretary of State, which is a 56% reduction from the prior $20 billion authorized share level. Now let's hear from Mark Schmidt regarding their actions to reduce the share count.
Are there plans to reduce the outstanding shares this month? What would prevent you from initiating another share reduction?
Well, we can control the authorized share level. So as we did in third quarter and reflected on that in the announcement last week of third quarter results, we dropped our authorized shares from 20 billion to 8.75 billion. We're continuing to evaluate whether we even need 8.75 billion even as a denominator. So we can affect that. As I've said in our shareholder letter, we expect our acquisitions to push us towards the 6 billion tops, somewhere between 5.5 and 6. I'm not to a place yet where it just makes sense administratively to drop the 875 to something else. But finance is looking at that. One thing that does do for us is it does actually reduce our operating costs each year. The higher your authorized shares, the more that it costs to operate. So there is some logic in dropping it down again. And we'll, make some announcements on that if that's something we're going to do. Right now, the biggest effort is still the ongoing, continuous work to try to rectify the 700 million restricted phantom shares, and that's a continuous process. We are working on it, but it hasn't been resolved fully yet. So more on that as we make progress. And that's the biggest thing we can do to reduce the outstanding shares without entering into a significant buyback activity, which we've been discussing as well. So.
In this article, CYBL CEO also reminded us that they implemented a no reverse split policy with the Nevada Secretary of State, which prevents CYBL from executing a reverse stock split for 5 years. They also announced a channel delivery partnership with Strike Group LLC to drive the adoption, contracting, and revenue of the FlightEye drone solutions products and the Cyberlux infrastructure products, including LED street lighting and solar power solutions. Cyberlex also introduced their Flight GDN platform, a global UAS capabilities framework to harness the future of UAS capabilities. CYBL CEO Mark Schmidt further commented, going forward, Cyberlex is harnessing the future, and we're driving operational growth with current and future technologies through fundamental organic growth and through an accelerated acquisitions and joint venture strategy, all fueling our significant future growth. I know many of you have been frustrated by Cyberlex stock's recent poor performance. Per this Market Watch slide, Cyberlex is down 31% over the past month. CEO Mark Schmidt has some enlightening feedback on what they are doing to improve the stock's performance. But before we go there, remember that OTC stocks are highly risky, so I only invest money in them that I can afford to lose. High risk equals high potential reward.
I also would like to just address some of what's going on in the market. I know it's been a tough week. I can't tell you how difficult it is to watch us go sideways and then down, and then sideways and then down, particularly as we're releasing results that are fundamentally transformative for the company. Being able to see the revenue grow the way it did and make that announcement and then see the stock summarily get beaten down is tough for everybody involved. And I really appreciate the shareholders that do see the long term and do see the company in the future, share our vision. We have just gotten started, so we have a long way of transformative events in this company that are in the pipeline. Some of the dilution that has happened recently, people have noted. I just want to address that is all acquisition related. We have a number of acquisitions in the pipeline, as you've seen from our roadmap. Some of those take time, so we have to get started now if we want to see results produced between now and year end, or now in first quarter, now in first half. We've been pretty explicit about where we're targeting our efforts. So you can have a general sense of that. I can't disclose it until we're ready to announce it, but there are plenty of catalysts there for the right type of dilution in a company. You can't grow if you don't actually have some changes in your equity structure, unless we're just paying cash, and we don't want to burn all of our cash in acquisitions where we want strategic value created. And we want people to be all aligned with us achieving our results and getting the fundamental growth that comes from that. So we're keeping a careful balance. We've announced some of the structures of the acquisitions we've done. We'll continue to do that as much as it makes sense. Again, I'm not going to ever disclose any competitive advantage we have, but you can enjoy the information that I do share as being the fundamentals that we operate the business on.
What's really exciting is that here Mark Schmidt talks about deals they are pursuing to leverage their expertise to take advantage of Biden's infrastructure bill.
We have some infrastructure capability now that we are going to leverage with this infrastructure legislation that's just passed. I did disclose that we have a rural broadband initiative that we're pursuing. It's a $45 million opportunity. We have boots on the ground we can put. This is, literally fiber in the ground, telecom equipment in certain cases. So it's a pretty exciting capability we now have with the FBD acquisition, and certainly some of the resource we can leverage here in the U.S. market as well as the South American market as we get to those renewable projects. So a lot going on there, and we'll have more information on that as we go.
I always love hearing from you, so please let me know in the comments below what your thoughts are about CYBL's future, and sign up for our newsletter through the link in the description below for penny stock alerts and notices regarding videos coming soon. Next, you'll want to go here to view CYBL versus ILUS shootout videos and CYBL versus Fern.